we'll be going over IRS Form 8844, Empowerment Zone Employment Credit. So this is a federal tax credit that's available to certain employers who hire employees living in qualified empowerment zones. So before we get into the form itself, there are a couple of terms that we need to break down. First, the Empowerment Zone Employment Credit. At this point, this tax credit has been extended several times. The current iteration is that it is available for businesses and certain taxpayer entities through the calendar year 2025. So the tax credit itself is 20% of the employer's qualified zone wages paid or incurred during the calendar year for services performed by an employee while the employee is a qualified zone employee. So that tax credit is up to $15,000 per employee. So a couple of points to make. Qualified zones are defined by the federal government between the Department of Housing and Urban Development and the IRS. There is a certified list of both urban empowerment zones and rural empowerment zones. And you can find that list either on the form instructions or we've attached it to the article that we put onto our website. Qualified zone employees are employees. They can either be full-time or part-time as long as they perform substantially all of their services for the employer within an empowerment zone in the employer's trade or business, and then B, they actually have their primary residence within that empowerment zone while performing those services. So there is a list of people who cannot be considered qualified zone employees. Anyone that's a 5% owner of a corporation, if the employer is a corporation, or if it's not a corporate employer, then anyone who's entitled to more than 5% of the capital or the profits. So a partnership where the person's more than a 5% partner, so on and so forth. Any individual that's been employed for less than 90 days, unless that individual was either terminated for cause or became disabled and unable to work during that period of time. If the disability ends before the 90th day, then the employer must offer to re-employ that person. Any individual that's employed by the employer at certain businesses that probably don't make sense for for empowerment zone investments. Certain businesses that are listed in the form instructions, they include private or commercial golf courses, country clubs, massage parlors, hot tub facilities, suntan facilities like tanning salons, racetracks, or other facilities used for gambling, or any store where the principal business is the sale of alcohol beverages for the consumption off premises. So like a package store. And then any individual that's employed by the employer in a trade or business where the principal activity is farming, and if basically the sum of their net assets, whether it's leased or owned, exceeds $500,000. So those are examples of people that cannot be qualified employees, in that you can't calculate their wages as part of the tax credit. And then to further define wages, those are any wages that are subject to the Federal Unemployment Tax Act without dollar limitation, any amounts that were paid or incurred as educational assistance payments, or any amounts paid or incurred for an employee that was under the age of 19 as part of a youth training program. conducted by the employer in conjunction with local education officials. So those are kind of all the definitions and the key terms that you may need to know just to be familiar with, because this employment credit is simply going to take 20% of the qualified wages plus any pass downs, or any credits that were carried forward or passed through from certain entities, subtracted by any employment credits that you have to push out to either patrons of a cooperative or estate and trust beneficiaries. So with that said, we're going to go start through the form itself. So in line 1, enter the qualified zone wages. The credit must be figured using only wages that you paid or incurred in the calendar year ending with or within your tax year. So the example is, if your tax year goes from April 1st, 2020 to March 31st of 2021, then you would only be able to use the wages from January 1st of 2021 ending on December 31st, 2021. So wages paid after the end of the calendar year can only be used to determine the credit for the following tax return. And so the limitation is $15,000 for each employee, but that credit amount, that maximum amount, is reduced by any amounts of wages or that were paid or incurred to calculate the work opportunity credit on IRS form 5884. So you can't use the same wages to calculate the empowerment zone employment credit and the work opportunity credit. But we'll just say that Doe Enterprises has $50,000 of qualified wages on behalf of its employees. Now in line 2, you simply multiply this by 20%. You have to reduce your deduction for salaries and wages, and then those education and training costs by the line 2 credit amounts. So we're going to multiply this by 20%, and that's $10,000, which means that on whatever schedule I file, whether it's Schedule C if I'm the sole proprietor, whatever tax return I'm taking a deduction for employee wages, I have to remove this tax credit amount. So, and even if it's a year where I can't take the full credit and I have to either carry it forward because of my tax liability limit, I still have to back that out of the deduction. So in line 3, we're going to enter any empowerment zone employment credit from partnerships, S corporations, cooperatives, estates, and trusts. So you would find these on Schedule K1, on Form 1065 for a partnership. That K1, it would be in box 15 with a code L. If it was an S corporation and the form was 1120S, that K1, that line item would be contained in box 13, code L. For K1, that's part of Form 1041 for either estates or trusts. That would be in box 13, code K. And then for cooperatives, IRS Form 1099-PATR, that's the taxable distributions received from cooperatives, that would be in box 12. So if you're a partnership and S corporation, you report these tax credits on line 3. Estates and trusts that can allocate those credits would also put those on line 3. Anyone that's using lines 1 and 2 to calculate a tax credit would also enter this number on line 3. However, if your only reason for filing this form is to report one or more of these items from your Schedule K1 or Form 1099 PATR, instead of completing IRS Form 8844, you can simply report that directly on IRS Form 3800, which is the general business credits. You would enter that in Part 3, Line 3. So unless you have a reason to, unless you're one of those named entities, you might not have to use this form at all. But for this purpose, we'll just say that we have $10,000 of additional credits passed down, right? So we'll add these in line 4. Okay, so $20,000. So we'll just say that Doe Enterprises is an S corporation. We're going to stop here and report this amount on Schedule K. If we were in a state or trust or a cooperative, we would go down to line 5. And momentarily, I'll do just that to walk through that. But any other taxpayer would report this amount on IRS Form 3800 as part of the general business credit, Part 3, Line 3. So, and at some point, you will report this on Form 3800, Part 3, Line 3, unless you are a partnership or an S corporation reporting it on Schedule K. So for those other entities, the cooperatives, the estates and trusts, you also have to report any amounts that you've pushed out to your patrons or to your estate beneficiaries, right? So these are all proportional to the amount of entitlement of income items, elsewhere in that form. So, if there's a beneficiary that's otherwise entitled to 10%, then that's the amount of the credit that you would pass through to that beneficiary. So we'll just say that there's $10,000 that gets pushed out to beneficiaries of the Doe Enterprises Trust, and then we would simply subtract line 5 from line 4, and we would enter that number on IRS Form 3800. So depending on what type of taxpayer status you have, you may report your final number from line 6. You may not have to complete lines 5 and 6. You may simply report the final number from line 4. And if your only reason for reporting this tax credit is so that you can fill in this line in line 3, but you have no other taxable events related to this credit, then you can just simply report that directly on IRS Form 3800 without completing IRS Form 8844. That's all we have for this video. If you want more detail, we actually break this down a little bit further in our article, which you can find on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 8844 in the search bar, and you'll see our article. If you like our articles, please subscribe to our newsletter. If you like our videos, please subscribe to our YouTube channel. And as always, if you have questions or comments, please post them in the comments section. Thank you very much and have a great day.